Jay says, hey, Jay here. I've been investing ever since I found your podcast, and I opened my first brokerage a few months ago. I have two questions. One, I know you guys preach about time in the market instead of timing the market and not to worry about the stock's current drops. However, do you have any recommendations for maybe some single stocks instead of the usual ETFs to add to my portfolio during this time of volatility? And two, more importantly, I recently started a new job and my earnings more than doubled. I was wondering if you had any additional advice on automation for budgeting. For examples, how many accounts I should have and for what tasks. Great question, Jay. Single stocks. I think it's really important so whenever you're thinking like, okay, what single stocks do I want to buy? I want everyone to only focus on the blue chip, best of breed single stocks, right? These are companies that have been profitable for a long time. They're likely, a top 50 holding inside of the S&P 500 by market cap. They've been paying a dividend maybe. Their profits grow every year, right? These are the types of blue chip single stocks that you want inside of your portfolio. Right now, in preparation for this question, Robert and I dove into some of our single stock portfolio, and we were looking at some names that we really like. Two right now that we like the most are Amazon and Google. We both think that they are going to do incredibly well over the next 5 years, especially from a free cash flow, operating cash flow, and earnings per share perspective. So buying Google and Amazon, in my opinion, around these prices, dollar cost averaging into some of them make a lot of sense. We also looked at Microsoft and Apple. We think they're a little too overvalued historically speaking at the moment, but Amazon and Google, you're looking for some single stocks, that would be my suggestion. And then Robert, do you want to maybe take a stab at his second question around what automations for his budget should he be building now that he's making all this extra money?
Yeah, I love this part of the equation because when it comes to automation, it's not just automating your investments where you put aside X amount per month per platform, which is we're going to get to that, but it's about automating your bills. That could be as simple as putting everything on auto pay so you don't have to think about it and making sure that they're paid timely so you're building really good credit. But the automation of your investments is really cool as well. That's why we love public.com. You can do those automated monthly investments, whether it's in the bonds or you're doing cryptocurrency or ETFs or whatever. But also I have automated investments with Acorns, Fundrise, all of the companies you hear us talk about. Like with Fundrise right now, I have $250 a month that comes out every single month for years now, and it just builds and grows and grows and grows. Same thing with Acorns. You can do a set it and forget it strategy there. I personally do Acorns $25 a week. I love it. It's like found money when I look at the account every few years. So all the automation you can do helps make you consistent with your investing. People that only invest when they think about it tend to try and time the markets. And that is absolutely the wrong strategy. The more automation you have, the less timing the market you will try to do, and the better off you'll be in the long run.
Great answer there, Robert. I think when it comes to budget automation, I agree. Put things on auto pay, understand what day of the month specific things are supposed to come out of your account so you know exactly what your account balance will be before it even happens. Wealthy people forecast, broke people react. So you want to be forecasting with your money. When it comes to investing, obviously we want to encourage you to invest up to the match in your 401k to get that free money, and then go everything above that used to max out your Roth IRA. And then if you still have money left over and you have autonomy in your 401k, go max that out, assuming it's invested properly. And then if you still have money left over, build up that bridge account. That's what you want to do on public.com. And speaking of public, again, automations on public are super easy. You just create something called an investment plan. You tell it how often it's going to take money from your checking account. Call it once a week. It'll take $100 from your checking account, so $400 a month. And of the $100, it's going to put 25 into VOO, 25 into VTI, 25 into QQQ, and 25 into VGT, or whatever other things you wanted to put money into. And then congrats. Now you're investing $400 a month into the tried and true ETFs, that index funds that we talk about. And it's all spoken for before the month even begins, right? You have that in your budget. You're looking at it. You're projecting for it. It's all good. So that's how I'd approach that, Jay. Automating your money is incredibly smart, and we encourage everyone to do it, no matter how you do it, if it's with Public or Fundrise. I do $150 a month on Fundrise. I've been doing it since like 2021. It's got thousands, if not tens of thousands of dollars now in this account because every month it just like takes $150 and that's what it is. It's so cool. And to your point, it does feel like just like found money, right? If it's in the budget and you look for it now 3 years down the road, you're like, whoa, where'd this $12,000 come from? It's like, yeah, you've been investing. And because you've consistently invested, it just grows over time.
Yep. But that's the whole goal with automation is becoming wealthy and financially free does not happen by accident. It has to come with strategies, automations, and being consistent. That's it. It's that simple. And the more people start to do that, like Acorns is a great example. I round up all of my purchases using Acorns on my debit card that I use. And it's just so funny because I'll look at the account once every couple of years. I'm like, wow, that is crazy how it has accumulated this much and has gained so much just by robo investing. And it's just one of the best parts of building strategies so you automate as much as possible. I love that question.